Hello and welcome to another edition of Better Informed. Today we had the first major property report come out of the year, and that's from our friends at Property Monitor. They looked back at the data from January and there's three really interesting headlines came out of it. First, property prices. Property prices across Dubai in January recorded a 1.1% increase from December. And that, if you run that ahead, that would be an annualized rate of about 13%, 13.2% the year looking ahead. Now, it's important to note that, like in every market, there are winners and losers, and it's really the villa market that's showing the lion's share of that price increase, whereas apartments certainly been lagging behind due to the remaining supply issues we've got in the apartments market. The second big trend we've seen is off-plan. Off-plan now lagging transactions to the secondary market by 3 to 7, so 30% of all deals in January are off-plan, and that's a big shift. You know, it was only 2 years ago when it was 30 to 70 the other way around. 70% of all deals in the Dubai market were off-plan, now it's 30, so there's a real shift there. And then thirdly, mortgages. We saw a record number of mortgages recorded in January this year. They're actually up 163% year on year. Now, we know why. Affordability and availability of mortgages has played a huge role in driving demand over this last few months. The mortgage cap down by 5% means down payments are lower, and crucially interest rates at their lowest ever level and down 25% year on year. And the report also has come out that transactions in January 2021 were 11% higher than 2022. So all very positive. Interestingly, whenever you look at these numbers, when you look at this data, you have to understand that this data is 2, maybe even 3 months old. This is transactional data through the DLD. So these were deals signed and these were prices agreed 2 or 3 months ago. Do I think this is a trend that will continue? Well, yes, and to understand that, we have to look at the trends of the transactions being agreed today. In January at the Betterhomes offices, we agreed 109% more deals than we'd agreed in January 2020, which in itself was a busy month, but 2021, you know, the number of transactions in the market has certainly increased. So you then play that through over the next couple of months, I think we'll see these trends in these reports continuing. So how should you feel about this? How should you feel about this if you're a buyer? How should you feel about this if you are an investor looking at the market? Well, I think there's really, for me, 2 key takeaways. The first one is, it's very clear now that the bottom of the market is behind us. You know, go back to summer 2020. That's really when you found prices at their very lowest. If you are looking for prices at that level today, they just frankly won't exist, and you'll be looking for a long time. Is that a major concern? Well, frankly, no, I don't think so. I think the value we see here in today's market is still incredibly good. Today's prices, in fact, are still 3.5% lower than they were in January 2020, so there's exceptional value still to be had here. We're at the start of a new price cycle in the Dubai property market, and yes, prices have come up a little bit, but you know, certainly there's a long way to go, I think. So it shouldn't be putting people off. In anything, you know, my advice to people who are thinking of moving, crucially looking to trade up within this market, I'd be looking to potentially bring those decisions forward. The second big takeaway for me is that this market, and perhaps for the first time in the history of the Dubai property market, really is being end user led. It is a maturing market, and we can see that in all of the numbers. We see that in the shift to the secondary market. We see that in the shift to the mortgage market, and crucially, we see it here at Betterhomes as well. In January 2020, 20% of all our buyers identified themselves as an end user. In this January, that's grown to 60%. So that's 3 times the number of people identifying themselves as an end user versus an investor buying in the market today. Well, why is that important? Well, put very simply, for me, end users mean stability, and stability means sustainability. End users, crucially, are less likely to speculate in the market, which drives prices up, And just as importantly, when prices do soften, when there is a downturn, end users are far less likely to sell quickly, which means that both the ups of the market are slightly less steep and the downs of the market certainly are less steep as well, which should be an encouraging sign for anybody who wants to look at the long-term sustainability here of the Dubai property market. So, I think that really is a very interesting trend we're seeing, and a very positive trend as well. As always, you can find out more information on our website at bhomes.com, or you could follow me at Rick Waind on Insta or on LinkedIn. Thank you. Goodbye.